You have $1,000 sitting in your bank account, and you know you should invest it. But every time you try to figure out how, there's stocks, bonds, ETFs, mutual funds, crypto, real estate, and suddenly, that $1,000 just stays in your account, doing nothing. Here's the truth. Investing your first $1,000 is not complicated. In the next 10 minutes, I'm going to show you the exact step-by-step plan to invest your first $1,000, even if you know absolutely nothing about investing. And by the end of this video, you'll know exactly where to put your money. Starting today. Let's go. Welcome back to Wealth Decode Blueprint, the channel where we decode the secrets of wealth and build your financial blueprint, one video at a time. If you haven't subscribed yet, hit that button right now, because every Tuesday and Friday we break down complex money topics into simple, actionable steps that anyone can follow. Now, let's talk about your first $1,000 investment. We're going to cover 6 simple steps. Follow them in order, and you'll be investing confidently by the end of today. Starting with step number 1. Step number 1, build your financial foundation first. Before you invest a single dollar, you need to answer this question honestly. Do you have an emergency fund? If the answer is no, your first $1,000 goes here, not into the stock market. Here's why. Imagine you invest $1,000 in stocks today. Next month, your car breaks down. Repair bill, $800. You're forced to sell your investments, possibly at a loss, just to cover the emergency. The fix: keep $500 to $1,000 in a high-yield savings account first. Apps like Ali Bank or Marcus give you 4.5 to 5% interest while keeping your money safe and accessible. Emergency fund done? Now, and only now, you're ready to invest. Step number 2. Step number 2. Understand these 3 basic investment types. You don't need to know everything about investing, but you need to know these 3. Number 1, stocks. When you buy a stock, you're buying a tiny piece of a company. Apple goes up 10%, your investment goes up 10%. Apple goes down, your investment goes down too. Higher risk, higher potential reward. Number 2, bonds. Bonds are basically loans you give to the government or companies. They pay you back with interest. Lower risk, lower reward. Think of bonds as the safe, boring option. Number 3, index funds and ETFs. This is the best option for most beginners. Instead of buying one company's stock, you buy a tiny piece of 500 companies at once. This is called diversification, and it's the secret that most Wall Street investors don't want you to know. The S&P 500 Index Fund has returned an average of 10% per year for the last 100 years. $1,000 invested today at 10% annual return becomes $17,000 in 30 years without doing anything. That's the power of index funds. Step number 3, choose the right investment account. Most beginners skip this step, and it costs them thousands in taxes. You have 2 main options. Option 1, Roth IRA. This is the best account for most beginners. Here's why. You invest after-tax dollars now, and your money grows completely tax-free. In retirement, you pay 0 taxes on your withdrawals. $1,000 invested in a Roth IRA today could be worth $17,000 in 30 years, completely tax-free. Contribution limit, $7,000 per year. Option 2, brokerage account. No contribution limits, but you pay taxes on gains. Good for investing beyond your Roth IRA limit. The recommendation? Start with a Roth IRA, max it out every year, then open a brokerage account. Best platforms to open your account: Fidelity, best overall for beginners; Schwab, great customer service; Vanguard, best for index fund investors. All 3 are free to open, no minimum balance required. Step number 4, here's exactly how to invest your $1,000. This is the moment you've been waiting for. Here's the exact breakdown. $700, S&P 500 Index Fund. Ticker symbol, VOO or SPY. This is your core investment. Diversified across 500 companies. Average 10% annual return historically. $200, Total Stock Market Index Fund. Ticker symbol VTI, broader diversification. Includes small and mid-cap companies. $100. International Index Fund. Ticker symbol VXUS. Exposure to global markets. Protects you if US market dips. Total $1,000. This is called a 3-fund portfolio. Used by millions of investors worldwide. Recommended by Warren Buffett himself. Simple, diversified, proven. Do not chase individual stocks with your first $1,000. Do not invest in crypto with money you can't afford to lose. Stick to this plan and let compound interest do the heavy lifting. Step number 5. Set up automatic investing. This is the secret weapon of every successful long-term investor. Here's what most people do. They wait for the perfect time to invest. They watch the market go up and think it's too expensive. They watch the market go down and think it's going to crash further, so they never invest. The solution? Dollar cost averaging. Set up an automatic investment every single month on the same day, regardless of what the market is doing. $100 per month automatic investment in S&P 500 index fund for 30 years at 10% average return becomes $226,000 from just $100 per month. How to set it up? Go to your Fidelity or Schwab account. Find automatic investment setting. Set amount whatever you can afford. Set date, same day as your paycheck. Done. You never have to think about it again. Your wealth builds automatically. Step number 6. The golden rules of investing. Rule number 1. Never invest money you need in 6 months. The stock market goes up and down. Short term, it's unpredictable. Long term, it always goes up. Only invest money you won't need for at least 3 to 5 years. Rule number 2. Never check your portfolio every day. This is the biggest mistake new investors make. You invest $1,000. Market drops 10%. You panic. You sell. You lose $100. Market recovers next month, but you already sold. The fix: check your portfolio once a month, maximum once a week, never daily. Rule number 3. Never try to time the market. Even professional fund managers cannot consistently predict when the market will go up or down. Your job is simple. Invest consistently. Stay invested. Let time do the work. Rule number 4. Increase investments as income grows. Every time you get a raise, increase your monthly investment by 50%. This one rule alone could make you a millionaire. Rule number 5. Never invest in something you don't understand. If someone promises guaranteed returns, run. If someone says, get rich quick, run. Slow and steady wins every single time. So let's do a quick recap. Step 1. Build your emergency fund first. Step 2. Understand stocks, bonds, index funds. Step 3. Open a Roth IRA account. Step 4. Invest $700 VOO, $200 VTI, $100 VXUS. Step 5. Set up automatic monthly investing. Step 6. Follow the 5 golden rules. That's it. Your first $1,000, invested wisely, is the foundation of your entire financial future. The best time to invest was yesterday. The second best time is right now. If this video helped you, smash that like button. It helps more people start their investment journey. Subscribe to Wealth Decode Blueprint, because next video, we're breaking down exactly how to build a budget that actually works. The 50-30-20 rule. Complete guide. The link is right here. Decode your wealth. Build your blueprint. Let's go.